Welcome everyone. Today we're going to learn the whole accounting process in a very simple way. So we'll try to see from where accounting is started and where it is end up. So we're going to see the steps we have in the accounting process. So accounting start mainly from the journals. So if someone asks you, is there anything before the journal? The answer will be no. There is a nothing before the journal. So when I said journal, I mean debit and credit. So there is nothing before journals except the transactions. So journals means debit and credit. So there is nothing before journal. Accounting start from journals recording the transaction in the form of debit and credit. Now, what is transaction? Transaction is the day-to-day activities that business do in daily life. For example, buying something, selling something. So selling and buying, this is basically the way business do the transaction. So if someone asks you, can you prepare some journal? So we need to tell them, yes, we can prepare the journal, but we need transaction for that. So we need the transaction to prepare the journals. So once you prepare the journals, by using these journals, the step number two will be prepare the ledger account. Prepare ledger account. Now the ledger account means the T account. It looks like T. Ledger accounts is the T account, and we know left hand side is the debit side and the right hand side is the credit side. And this ledger account will have a balance CD and balance BD. And after that, by using this ledger account, on step number three, we prepare the trial balance. So we prepare the TB trial balance. And on the trial balance, we only say what is debit and what is credit. So we take all the balance BD from the ledger account and include on the trial balance. So here we said debit and the credit. So we recorded every single ledger balance, especially the general ledger balance, we would say, because we don't take the subsidiary ledger. The general ledger balance we moved later on to the trial balance. And ideally, the trial balance should be balance. Ideally, the trial balance debit side and the credit side should be equal. And once you prepare the trial balance, the next step is to prepare the financial statement. And in financial statement, we prepare profit and loss account and we prepare balance sheet. So we use this trial balance to prepare the financial statement. So once we prepare the profit and loss account and the balance sheet, then we submitted this to HMRC and the company house. So that means accounting processes start from journal and is end up with the financial statement. And every single step or process we have that is very relevant. So to prepare the ledger account, we need journal. To prepare the trial balance, we need ledgers. And to prepare the financial statement, we need trial balance. So once we started the journals recording, and we end up with financial statement. And to start with the journal, we need transaction. And we already discussed transaction means the buying and selling, all this transaction. All right, so let's try to prove one thing. If we start recording something, how can we end up with? For example, let's say one company have true transaction. Transaction number one, sell and receive check, sell by check. So the company sells something and received a check or received a cash or received a bank, whatever it is. So let's say £200. This is their income. And they have another transaction, purchase and paid by check, let's say £50. So company sold something and received 200 from the customer, and they buy something, paid £50 to the supplier. Now obviously there could be a lot of transaction. I'm just showing two so you understand actually how does it work. So the first one, we start recording in the form of journal first, isn't it? So number one, journal. So start the first one, sell something and receive check or receive the money in the bank. So we said bank is debit. And how we do the debit and credit, I have another video for all of you to understand the debit and credit. If you um, still not sure about the debit and credit, you can always look at that video and understand that. So bank is debit 200, and the debit and credit always has to be equal, and sales is income, so sales is a credit 200. So money came to bank, so bank asset is going up, so bank is debit. Sales is income, income is increasing, so sales is credit, number one. And number two, we have purchase and paid by bank or paid by check. So purchase is expense. So purchase debit, £50. And bank money is going from the bank. So bank credit, £50 because asset decreasing. So the process number one is done. Now I'm going to use this two journal to prepare the ledger account. So ledger account means the T account. So I'm going to make T account for every single entity we have. So every single entity we have, we're going to make a separate ledger account. For example, one for bank, one for sell, and one for purchase. So I'll make a T first. One is for the bank, one is for the sell, and one is for the purchase. So let's do the bank first. So bank is a debit. So on the debit side, I'm going to write sell 200. Then number two, journal, bank is a credit. So on the credit side, I'm going to write purchase 50. If you don't know how to move the information from the journal to ledger account, you can look at my other video. You'll understand that from there. So this one is done. Bank is done. The next one is sales. So sales is a credit. So on the credit side, I'm going to write the opposite. So I'm going to write the bank, and that is £200. And I have only one sales, so that's it. Then the purchase. Purchase is debit. So on the debit side, I'm going to write bank. That is £50. So step number two is done. Transferring all the information from journal to ledger account, it is done. Now I have to find the balance CD BD. We already know how to calculate the balance CD and the balance BD. So we need to look at the higher side. So this side is higher, 200. And I'll copy this one, this side as well. And the difference between these two will be balance CD. Balance CD, that is 150. And this balance CD will come opposite side as a balance BD. Balance BD, 150. I'm going to use this balance BD later on for the trial balance purpose. Then the sales, I have nothing, only 200. 200, and obviously the balance sheet is 200, and this balance sheet will go opposite side as a balance BD 200. Then I have a purchase, nothing on that side, so only 50, 50. The balance sheet is 50. This balance sheet come opposite side as a balance BD 50. So my balancing off is done. So I have a balance BD 150, I have a balance BD 200, and I have a balance BD 50. So I have a three balance from the three account. Now step number three, I'm going to prepare the trial balance. Based on the ledger account, I'm going to prepare the trial balance. And if my journal is correct, if I never missed anything, if I never made any mistake, the trial balance has to be balanced. That means debit side and the credit side will be equal. So there is a very simple way to prepare the trial balance. All you need to see the bank, for example, the bank. So bank, the opening balance, which side? So opening balance means the balance BD. So we know the left hand side is the debit side and the right hand side is the credit side always. So we see the balance BD on the debit side, isn't it? It's on this side. So balance BD on the debit side. If the balance BD on the debit side, it will come to the debit side on the trial balance. So we said bank 150. Then we move to the next one, sales. On the sales, we can see the balance BD on the credit side, isn't it? That side is the credit side. Balance BD on the credit side. So you're going to write sales 200. And on the purchase, we can see balance BD on the debit side. So you're going to write purchase on the debit side. So we are actually following the balance BD 50. That's it. And after that, if we add both sides, it should be equal. And if it is equal, debit and the credit side, that means it is checked. There is no mistake. We haven't done anything wrong. So everything is good here. So once the trial balance is prepared and if it is balanced, our next step will be prepare the financial statement. And on the financial statement, we have a two-part profit and loss account and the balance sheet. So these cells will be the part of our P&L account, profit and loss account. Purchase will come to the profit and loss account. And on the balance sheet, bank will come. So profit and loss account is all about income and expense. Income and expense. And on the balance sheet is all about assets and liabilities. So if you see the transaction is income or expense, it will come profit and loss account. If you see the transaction is asset or liability or capital, it will come to the balance sheet. And after that, when you prepare the completed profit and loss account and the balance sheet, this one is submitted to HMRC or company house, and we called it the accounts. So when the client come to you and they ask you to prepare the account, so you need to prepare actually the financial statement. And to prepare the financial statement, you have to follow all the steps: journal, ledger account, trial balance, and financial statement. And for all of this, you need the transaction. So the client can come to you, they can give you the bank statement, they can give you the invoice, they can give you all the cash transaction. And from there, you will see for the whole year how many transaction is done from this company. And based on that transaction, you prepare this recording, the journals and the ledgers, and this is called bookkeeping. So if you are applying for the bookkeeping job, you have to have this on your head, and you have to be very good on debit and credit and prepare the trial balance, all of this. I hope you understand this simple process of accounting, that is start from journals and end up with the financial statement. And if you have any confusion, if you still need any help from me, you have my email on this description. You can always email me, and you can have other videos that will be also helpful for more understanding. Thank you for watching.